Zacks Screen of the Week, an overview of a timely stock screening strategy aimed at helping you produce more profitable investing results. Talking about price to sales ratio this time around with Kevin Matris, top stock screener here at Zacks.com. It's been a while since we've talked about price to sales ratio.
Yeah.
But this is one of your favorites. I do know that.
Right. I think about it every day, Terry, whether we talk about it or not.
See,
it's always in my heart.
You just live this stuff, don't you?
The price to sales ratio, it is one of my favorite items, and it's a valuation metric. And given the recent run-up in stocks, I think investors are looking more and more at valuations to really help them with their stock selection. And I think rightly so, because again, a lot of companies have great growth rates, but you really need to see if these companies are undervalued or overvalued. And as I alluded to earlier, if I were to just look at one item, aside from the Zacks rank, if I could just use one item for the rest of my life to screen with and to pick stocks with, it would have to be the price to sales ratio.
All right, so for those who may not remember from previous conversations, what exactly is the price to sales ratio?
All right, let's start with a definition, so check it out. The price to sales ratio is just that. It is price divided by sales, and it is a ratio used for determining a company's under or overvaluation. So if the price to sales ratio is 1, that means you are paying $1 for every $1 of sales the company makes. Mm-hmm. If the price to sales ratio is 2, that means you're paying $2 for every $1 of sales the company makes. And as you might have guessed, a lower price to sales ratio is better. So if, let's say, you have a price to sales ratio of 0.5, that means you're paying 50 cents for every $1 of sales the company makes. And in my opinion, if you can pay less than $1 for $1's worth of something, I think that that's a pretty good bargain.
Okay, why exactly is this one of your favorites or your favorite?
Well, one of the reasons why I like the price to sales ratio is because it looks at sales rather than earnings like the PE ratio does. Mm-hmm. And when you take a look at it, sales are harder to manipulate on an income statement than earnings. So I think you get a truer read when you're just focusing in on sales. Secondly, I would be hard-pressed to come up with a screen that couldn't be improved upon by adding the price to sales ratio to it. Now for me, I generally like to look at companies with a price to sales ratio of under 1. Now I will go as high as 4 based on what industry it is in, but generally I like to keep it within those ranges. And the reason why I say that is this. Let me pull up this chart here. In my testing, I have found that companies with a price to sales ratio of 1 or less produced the best returns, as you can see from this graph. Between 1 and 2, also fantastic returns, but you can see as the price to sales ratio gets higher, the returns get lower, and if you go all the way out to the right, you can see once you get over 4, the odds of success start working against you. So that doesn't necessarily mean that just because a stock has a price to sales ratio of over 4 that it's immediately going to go down. But as that chart shows, there is a higher probability for those companies to be considered overvalued, and it does show that you're going to be kind of fighting against the trend there. Now, another good way to use it, which is what I like to do a lot as well, is you can look for companies with a price to sales ratio below 1, but if you want to kind of widen your scope and include other industries, start looking for companies with a price to sales ratio below the median for its industry. I think that's a good way to look at it, because if you were to look at REITs, for example, a typical price to sales ratio for a REIT is significantly higher than, let's say, a price to sales ratio for a tech company. So if you're trying to find stuff that's below the median for the industry, it becomes more inclusive and you're still finding the gems.
All right, give us those parameters to find those gems.
Yeah, check it out. So the screen that I'm running right now starts off with projected growth rate. So I want the projected growth rate to be greater than or equals to the projected growth rate for the S&P. So I want to find companies that are growing more than their industry.
Okay.
Then I want to find companies who have a positive earnings surprise and a positive sales surprise their last time out, right? If you have positively surprised in the past, there's a greater tendency to surprise again in the future. Also, too, we're looking at the Zacks rank of less than or equals to 2, one of the best rating systems out there, of course. We want to look for companies with a buy or a strong buy, but then getting to the payoff, we want the price to sales ratio to be less than or equals to the price to sales ratio for its industry. So we're really keying on two things: growth rates better than the industry and a price to sales ratio, a valuation metric, lower than the industry. Excellent screen.
All right. And stocks that came through.
Yeah, there was a bunch of stocks that came through. Here's 5 of them, very diverse set of stocks. CACI, Leapfrog Enterprises, Navigant Consulting, Red Robin Gourmet Burgers, and Trinity Industries. As I said before, all of these companies look great, and based on these valuation metrics and growth metrics, these are some of the top companies in their industry, definitely companies to consider.
Read more about this in the text version of this week's screen on our homepage, or linked to off of our homepage, Zacks.com. If you're not there already, go there, scroll down the page till you get to see Kevin's picture, and click on the live link headline right next to it. And if you want to know more about the Research Wizard, the tool that Kevin uses to achieve all of these screens, Zacks.com/Research Wizard is the place to visit on the wide open web. With Kevin Matris and the Screen of the Week, I'm Terry Ruffalo.